Hello, I'm Sarah Potter, Chief Economic Contributor for FactSet Insight. As we enter the second half of 2018, let's review the global economic forecast for the rest of 2018 and for 2019. Before we get started, let me share a little bit about my background. I've been with FactSet since 1999, but I've been working in the financial industry for nearly 25 years. During my tenure at FactSet, I've worked in application product development as well as economic content development. Currently, I manage FactSet's thought leadership products. Prior to FactSet, I held research economist positions, including my first job at Standard & Poor's DRI, which is now IHS Markit. At DRI, I worked on both U.S. and global econometric forecasting models, as well as transportation and steel industry models. I hold an MA in International Economics and Finance from Brandeis University and a BA in Math, Economics, and French from Dartmouth College. I am a CFA charter holder. So let's get started with looking at an overview of recent global forecasts. So we're going to take a look at forecasts from several recognized organizations. So first, we'll look at the IMF World Economic Outlook, the OECD Economic Outlook, Oxford Economics, FactSet Economic Estimates. And we'll talk about the impact of recent and known upcoming events on the forecast. So let's start with the IMF World Economic Outlook. The IMF's main forecast is published twice a year, in April and again in September, October, with interim updates published in January and July of every year. Most recently, the update was published in July of 2018. The forecast covers approximately 200 countries and regions, and the data is forecast 2 to 5 years out, depending on the country and the concept. You can find detailed write-ups of the forecast on the IMF website, and the forecast, when it's published, is generally widely covered by the global press. So let's take a look at what was in the July 2018 interim update. Global GDP, after expanding 3.7% last year, 2017, is expected to grow by 3.9% in 2018 and 2019. This is unchanged from the April projections from the IMF. The forecasts for the U.S. and China remain unchanged from the April forecast, while the Eurozone and Japan have been revised lower as a result of some negative economic surprises in early 2018. For the U.S. economy, we saw growth in 2017 of 2.2%, and for the next 2 years, the IMF is expecting 2.9% growth in 2018 and 2.7% in 2019. So risks to the growth outlook skew mainly to the downside over the short and the medium term, according to the IMF. The IMF cites tariff increases by the U.S. and retaliatory measures by trading partners as increasing the likelihood of escalating and sustained trade actions. The IMF is also looking for the potential for faster than expected increases in core inflation and interest rates in the U.S., which could lead to sudden changes for the fundamentals and assessment of the risks by investors. Financial conditions could tighten rapidly in response to some of these items, causing disruptive portfolio adjustments, sharp exchange rate movements, and reductions in capital flows, especially to emerging markets. So looking at the numbers for a few key regions and countries, in Canada, we're expecting growth to slow down to 2.1%, 2%. Already talked about the U.S. forecast. In Asia, we see China and India leading, with India having the highest growth rates, over 7%. Japan is expected to slow to 1% growth this year and 0.9% next year. In the Eurozone, we're seeing for the aggregate, the region of the Eurozone, 2.2% this year and 1.9% next year, with slowing forecasts compared to a few months ago. And for the UK, we're seeing the IMF is projecting 1.4% growth this year, followed by 1.5% next year. So let's take a look at over time how these forecasts have changed according to the IMF. So these are the forecasts for 2018 GDP growth for Canada and the United States. So the top line is the United States, and the lower one is for Canada. So you can see that for the United States, over the past year, the forecast has been substantially upgraded, largely due to the impact of tax reform in the U.S. The Canada forecast hasn't changed a whole lot from over the past year and a half, so looking at 2.1%. In Asia, not a lot of changes for the top two lines, which are India and China, although India has come down a little bit, China has been raised. The Japan forecast is actually looking quite a bit better than it was a year and a half ago. And in Europe, you can see this pattern where things were looking very good for a lot of the data. 2017 was a very good year, and those forecasts have been ratcheted back a little bit in the latest interim update. So now let's turn to the OECD economic outlook. Like the IMF forecast, the OECD publishes their forecast twice a year, in November and then again in May, June of every year, with interim updates published in September and February, March. Most recently, the OECD published their forecast in May of 2018. The forecast covers approximately 45 countries and regions, and the data is forecast for 2 years out. Detailed write-ups are available to accompany the forecast on the OECD website, and again, the forecast is widely covered by the global press. So a few highlights of the May 2018 forecast: global economic growth, estimated at 3.7% last year. The OECD sees 3.8% in 2018, 3.9% in 2019. Growth is improving or steady in most G20 economies, which really reflects a bounce back in trade and private investment, and there has been fiscal easing in many countries. Risks to the forecast include higher oil prices, rising trade tensions, which we also saw as a concern from the IMF, and financial volatility, particularly for emerging market economies. Looking at the U.S., growth of 2.2% in 2017 will be followed by 2.9% in 2018 and 2.8% in 2019, again, boosted by the recent fiscal stimulus package. So looking at the countries, again, the same list of countries, there aren't a whole lot of differences between this forecast and what we saw with the IMF. We see the same general growth pattern for both Canada and the U.S. And in Asia, we see, again, India and China leading the pack. This forecast is slightly more optimistic for Japan. You see 1.2% this year and next year, and pretty similar numbers for the Eurozone, 2.2% this year, 2.1% next year. The UK continuing to slow down as the concerns about Brexit continue to weigh on that economy, with 1.4% this year, 1.3% next year. So again, looking at the path of the forecast, it's interesting to see for the U.S., the top line here, that the forecast was lowered a year ago, and now it's been raised back up. So it's pretty much back approximately where it started a year and a half ago. Canada has actually been gradually lowered slightly. So 2.3% growth was forecast in November 2016 for 2018, and now we're looking at a 2.1% forecast for this year. Turning to Asia, we see that the China forecast has been raised while India has been lowered. Those are the top two lines, and pretty flat forecast for Australia, New Zealand. Japan, again, it's hard to tell with the scale, but you can see that Japan has been raised fairly significantly from where it was a year and a half ago. And for Europe, not quite as dramatic as we saw with the IMF chart, but you can see that the forecast peaked in March of 2018 for the Eurozone countries, and now it's been brought back. The lower line, kind of at the bottom, is the UK, and that forecast has actually been raised from where it was a few months ago. Now turning to Oxford Economics, which is another source that we carry on FactSet. This forecast is updated on a monthly basis. It covers over 100 countries, and the forecast includes long-term forecasts, so out 5, 10, 25 years, depending on the country and the concept that you're looking at. So here's the same table, same list of countries using the Oxford numbers. For the US and Canada, we see actually a slightly more pessimistic forecast here for Canada, the next 2 years, sub 2%. Then for the U.S., you see that the forecast is actually much more pessimistic than the other two for 2019, seeing growth of just 2.2% next year. So in Asia, we see India, again, leading the pack, followed by China, and you see all the other forecasts. Japan looking pretty good, again, roughly in line with the other forecasts. The Eurozone, 2.1% this year, 1.7% next year, and for the UK, 1.3% this year, 1.4% next year. Now let's turn to FactSet economic estimates. This is a consensus forecast database that we have on FactSet. It's updated every single day, covers over 75 countries, and we collect from over 400 global contributors. We extract the estimates from contributor research and then create the consensus values. The database includes over 1,000 data items, which covers economic indicators, monetary policy rates, and exchange rates. So looking at the forecast, the latest up-to-date numbers for FactSet economic estimates, we see that the numbers are pretty much in line what we see with the other sources. We see Canada at 2%, 1.9% for 2019, the US 2.8%, and then slowing to 2.4% next year. Pretty similar forecast for India and China. Also Japan, again, in line with the other forecasts, 1.1% this year, 1% in 2019. 2.2% for Eurozone seems to be the general range of numbers across all of these sources, slowing to 1.9% next year. And then for the UK, 1.4% for 2018 and 1.5% next year. So let's just take a quick comparison for the U.S. forecast across the 4 different sources that we've looked at. We see that the growth rates for 2018, not much disparity there, but for 2019, we do see a range of values for what forecasters are expecting. So the bottom line for 2019, Oxford Economics is the most pessimistic for next year, and then the top line is the OECD. So right now, they are the most optimistic looking ahead to next year for the U.S. economy. So with the daily data from FactSet Economics, we can look over time to see how the forecast has changed. And these are monthly numbers. So looking at the Eurozone trend of the forecast for 2018 and 2019. The top line is 2018, the bottom line is 2019. Again, we see this pattern where the forecasts have been gradually raised, and now because of the weak first quarter in the Eurozone, the numbers have been brought down over the last couple months. For Japan, we have the top line is 2018. We see a similar thing. The forecast was raised. Now it's been brought back. The first quarter in Japan was actually negative, so that's lowered the numbers for 2018. The 2019 forecast is actually flattened several months ago. It hasn't been updated. The UK forecast hasn't changed a whole lot over the past year and a half or so. So we can see that the forecast is generally in the mid-ones range, 1.4, 1.5%. So there hasn't been a whole lot of fluctuation there. Things were looking more optimistic for 2019 at the beginning of 2017, but now things have brought back and seem to be steadied out a little. And then finally, for the U.S., you can see the steady increase in the forecast, and both forecasts for 2018 and 2019 have moved in tandem. Now, one of the other statistics that we have for the FactSet Economics database is the standard deviation. And it's interesting to look at this value because it tells you the degree to which there's any uncertainty or volatility around an estimate. So these are the standard deviations for the 2019 GDP estimates for the US, the UK, Eurozone, and Japan. So you can see that at the beginning of 2018, so this starts in January of 2018, there was quite a bit of uncertainty. A lot of changes, I think, is more accurate around the 2019 forecast. And this is likely due to the fact that as analysts were absorbing the impact and analyzing the impact of the recent fiscal stimulus package, the forecasts were rapidly changing at that point. So you can see that the U.S. The standard deviation for the U.S. forecast was way above all of the other countries. So it has come back down, but you can see at the most recent data that the U.S. standard deviation is still higher than the other countries. And for the bottom one, the Eurozone is the lowest. And I think we saw that across the different forecasting agencies that the numbers are pretty much in line. So people have a good idea now of where the Eurozone is heading over the next year or two, but there's still some questions, especially around Japan and the United States. So let's look at some of the key developments behind these forecast revisions that we've seen over time. So for the Eurozone, previously it looked like the positive economic momentum from 2017 was going to continue into 2018, but the early data this year was a bit disappointing, particularly for Germany and France. So those forecasts have been brought down. In addition, there's quite a bit of political uncertainty in Italy that's weighing on the region. In Japan, and also we saw some disappointing early 2018 data. The economy contracted in the first quarter, although growth is expected to recover in the second half of 2018 and 2019. For the UK, this is the same story that we've seen for the last couple years now. Brexit uncertainty is really hurting business confidence and causing a drag in the economy. And the weak pound has boosted inflation in the UK and suppressed private consumption. In the United States, fiscal stimulus will boost growth in 2018, but growth is expected to slow in 2019. We're expecting 4 interest rate hikes this year and probably 1 to 2 more in 2019. The dollar has been very strong of late. It's strengthened quite a bit over the last 3 months. And the big item that everyone's talking about is tariffs and the retaliatory measures from our trading partners and what the impact of those will be on U.S. growth and global growth. So in conclusion, just some of the trends to watch going forward. The top one on the list has to be the rising trade tensions. What are the impacts going to be for the U.S. and for the world? Inflation and wage trends. We're seeing that inflation is starting to pick up. We've got rising oil prices. At the same time, we've had wage growth remain pretty low, and this is not just a U.S. phenomenon, it's a global phenomenon. So to see what happens there. Also watching the pace of monetary policy changes. Just last week, the European Central Bank left interest rates unchanged, but at the same time, they reasserted their plan to end the monthly bond buying program by the end of 2018. And from the UK side, the Bank of England meets this week, and we're likely to see an interest rate hike, which will be the first one since November of 2017. And of course, what will be the global equity market reaction to all of these events as they unfold. So thank you for listening today. If you have any questions about the data in this presentation, please contact us at eventcenter@factset.com. Thank you for listening.